Hey, what is up, everybody? I'm Jason, and you're watching my channel, Micro Investor. So, in this video, I want to talk to you guys about my top growth stock picks for April 2021. Now, obviously, these are growth stocks, so these are ones that I'm thinking that if you buy now and you hold for a little while, they have the opportunity to make a good amount of money in return. But obviously, this is my opinion, not any sort of financial advice. Please do your own due diligence when looking into these. But the reason why behind these choices is because there's either a good catalyst behind them or that the stock price has come down quite a bit here recently, and I think that now is probably the time to buy for them to shoot back up. So as we get to it, if you guys don't mind, please do me a huge favor and be sure to smash destroy and annihilate that like button, because that helps me out a lot with the YouTube algorithm and helps spread my videos to more people that might find it interesting. And please subscribe if you have not already. And if you're interested in being a Patreon, I have one. Link is in the description, and I have a private Discord attached to that. Thank you to all the Patreons. All right, everybody, let's get to this. Now, the first stock that I'm going to be talking about is NIO. Now, I have all the stocks here listed that I'm going to be talking about in this video, by the way. But NIO has seen its price come down quite a bit here recently. Now, NIO currently is trading between its 52-week highs right now. So it's not really in the middle of it, but it's still come a ways down from where it was at its highs. And it was just at its highs not that long ago. That was actually right at the beginning of 2021. The stock had gone up around $67 a share. Now, what's going on with NIO is it has seen some growing pains. This stock has been moving a lot since basically the Chinese government made their investments into NIO, and NIO had been selling more and more vehicles. They've been increasing their numbers of vehicles that they've been selling every single quarter. And they just had a great 2020 during the pandemic, which was the great thing for this company. Now, the reason why I think that there is a lot of opportunity with NIO is, one, people are already willing to buy this stock at much higher prices than it currently is right now. But two, that the more vehicles that NIO sells, the more opportunity they have for even more revenue, not just from the vehicle sales, but from their services that they offer. Now, NIO doesn't sell all their vehicles with a battery, which makes the price of their vehicles come down quite a bit in comparison to what Tesla's doing. Now, Tesla is a big catalyst for NIO because there's Tesla's moving a lot of vehicles in China, but at the same time, a lot of people want to buy Chinese-owned companies. So there isn't really a lot of big players in China to choose from. NIO is a great competitor in that aspect. Now, since NIO doesn't sell their vehicles, or they don't sell all their vehicles with batteries, that allows them to charge a monthly fee for that. They have their batteries as a service, and that just keeps revenue continuously coming in for this company, which is a great thing. And NIO also has their infrastructure, like how Tesla has their supercharger network. NIO also has something similar, and they also have a battery swapping business, which I've recently talked about. Earlier this week, NIO had swapped out. They announced they had swapped over 2 million battery swaps now. So that's a pretty good catalyst for this company, is their batteries as a service, their battery swapping. The fact that every single vehicle they sell is a potential customer to lock into a service. So when you think about that, like when you think about a foundation of a customer's base growing, is having a service attached to that, and that's what they have. And NIO also just announced that they delivered 7,257 vehicles in March, a record high, 373% year over year. First quarter is now 20,060 vehicles, a single quarter of more than 20,000 units, 423% year over year. NIO's total deliveries are 95,701 vehicles. Now, NIO hit that delivery numbers with their factory being shut down temporarily due to a semiconductor shortage. Which is not just affecting NIO, though. That is something that is affecting all automakers right now. There is a shortage of silicone that they can be using for their chips, and that is due because when things shut down during the pandemic, automakers and a bunch of other companies are not ordering these chips, so production had slowed down. But the consumers did not stop spending, stop buying things, and so the consumer interest was still there, but things were closed down. So eventually, the supply and demand, they basically hit a mark where it caused a big problem. And that's what we're seeing right now with a lot of these different tech companies, car makers, etc. But that is just a temporary problem. That problem is being resolved right now. All right, this next one is ViacomCBS, ticker symbol VIAC. Now, looking at the graph of this one, you would be a bit confused and trying to figure things out. Now, this one had a merge these two merged. Viacom and CBS merged back on December 2nd, 2019, and then it had a big downfall in March of 2020, obviously due to the pandemic, and then we saw it start rising back up, and then we saw this huge rise here. That is because CBS had CBS All Access, which was their streaming service, and Viacom had their own streaming service for Paramount, which had their own movies. And you got to remember that Viacom also is a big TV network, which is MTV, BET, Nickelodeon, Comedy Central. A lot of those shows, a lot of that programming that comes with it. So they had their own streaming service that they ended up making, which is Paramount Plus. So they combined some of their other streaming services that they had and just made it one thing. They also own Showtime, which they haven't merged into yet, but I'm assuming that that's going to be something that's going to happen eventually, that they will be combining Showtime to that as well. But that's why the stock went up a lot, because it became a big competitor to Netflix and to HBO Now and Hulu, Disney Plus, etc. Because there's a lot of kid programming, a lot of different movies, a lot of stuff that they really were just able to throw out in the market right away. And they had a lot of subscriptions already from their other services that they had, which they combined into one thing. So that we saw the stock price go up. Now, what happened just recently with this one, and we saw a huge sell-off going on, is that that they decided that they were going to raise more money. So they did a dilution of shares, I think to raise about $3 billion. So a lot, because this company's this stock's market cap currently right now is $28.5 billion. So $3 billion dilutions and more shares is quite a bit when you actually think about it. And that was when this stock price was way up there. When they were hitting their peak, they decided to do dilution, which is usually a good time to do it, but it didn't really work out well for them, because one of their biggest investors decided that time that they should just sell off their shares, and they just dropped a bunch of shares at that time, which then just made the stock tank because of that. That really hurt them a lot. But I like that this stock has come down a lot. It actually brings it back down to earth. It brings it back at a price close to where it was when they merged, and now it lets them build on with their Paramount Plus streaming service, which from what I hear, a lot of people are signing up for. It has got good reviews, and it has a lot of content. You got to think about all the programming that they have with these networks. And so I think that there's a lot of potential there, and I think what would really help them out is if they start taking their stuff from other services, like what Disney did with Disney Plus, when Disney started taking their movies and such back from Netflix and not relicensing anything back out. That would work great for Paramount Plus to grow shows like from what they have on Comedy Central, like South Park. If they were to be more exclusive with their content, that would be great, and that would be something that would make a lot of people interested in signing up for this service exclusively for that. And also, if they do the same thing with Showtime, that would also be another big thing for this streaming service as well. So I think that's a big catalyst for the stock. Next is Carvana, ticker symbol CVNA. Now, Carvana was already a stock that was moving really well before the pandemic. But then when the pandemic hit, of course, like all the stocks, they all take a big hit. But this one did go up and accelerate on this trajectory all through 2020 for the most part after the pandemic. And that for the reason is that they are an online e-commerce, and a lot of people were interested in buying vehicles that route. And also, it really helped push the name of this company a lot. Thanks to that, thanks to the simplicity of being able to buy a vehicle through them, and their stock just moved so much, so they became a huge growth stock in 2020 because of that. But now what we're seeing is this stock not really doing much in 2021. Now, they did hit their 52-week high here in 2021. The 52-week high of the stock over the last 52 weeks was $323, and their low over the last 52 weeks was $44. So you can see the large growth, but you can see what the stock is currently sitting at. It's come down about 20% or so, which is good actually, which is good that it had a bit of a correction there. But the big thing with Carvana is that this company has now really put themselves out there to allow people to know their name because of the pandemic. And the big catalyst that I see that they have is the stimulus checks and the tax returns that a lot of people have received already. They're going out and they're buying new cars. They're buying it through Carvana is one of the many places that would do it. This is used car buying season right now, and we're going into the much warmer weather as well here in spring. So I think that that's a big catalyst to be looking at with Carvana is the better weather, all the money that people have gotten from the stimulus and their tax returns, and they're looking to spend that. That's what people do, is they go out and they buy used cars. A lot of people do that, and I think that's going to really help out Carvana continuing to get more sales and really start seeing the stock start moving back up, which was great that it did do a correction. We saw it come down a bit. And then I think from this point, we'll probably start seeing this thing start moving back up here very soon, in my opinion. Next is Enphase Energy, ticker symbol ENPH. Now, Enphase has seen an amazing 2020, large growth there, this huge trajectory that the stock was on during that time. And now what we're seeing, like all the other stocks that I've been talking about here in this video, what we're seeing is a correction, which we just saw with Enphase, which the stock has been trading between the prices of $27 and $229 over the last 52 weeks. So now it seems like it has come down a bit. It's come down to more of a realistic level, losing about 25 to 30% from where it was at its highs just recently. And that's great to see. I like it to see that because that means that it's more normal to see something like that. It's better not to see a stock just continue going up, because the larger that these things do go up, the bigger they can fall. So we've already hit that point, which is, in my opinion. So I think from here, we can start seeing the stock start growing again. Now, during this time here, though, Enphase has acquired other companies, and they've also had a big catalyst for Enphase has also been their solar in general, where there has been a lot of money being pumped into solar energy. And especially now with the current administration, there is even more money being pumped into clean energy. And states, even like where I live in California, in Sacramento, California, we don't rely on a public company to handle our energy. We don't have companies like PG&E in this specific area. So we have a nonprofit that actually does the energy here, where solar power is something that is very recommended. A lot of incentives to get something like that. So that's a big catalyst for Enphase, is that that solar power is something that is being tax incentivized by governments, by state governments, and by federal governments to start using more of. So I think that that's going to help see the growth of this stock even more over a period of time. All right, next is Match Group, ticker symbol MTCH. Now, this is the big dating social media company. They own social media dating sites like Tinder, Match.com, OkCupid, Plenty of Fish, and many more from what I understand. And what has been going on with the stock for a very long time in general is it just has been growing very well. And then when we got to the pandemic, it did drop, but people really didn't stop dating. They didn't stop meeting people. There actually a lot of people were home and they had nothing other to do than to continue to try to find dates. So the stock just continued to grow from that point. Now what we've seen is basically from November of 2020 to now, the stock really hasn't done much. It's actually done a bit of a correction. It's come down a bit, and it's kind of just staying where it's at this moment. But the big catalyst with this one is that they've just recently acquired another dating site. They've been expanding. They just acquired a social dating site from I think South Korea here recently, and HyperConnect deal, whatever, a HyperConnect. Anyways, so they keep buying these other competition. So they basically are a dating monopoly in this industry. So they don't really have a whole lot to compete with. So every time a new dating site comes out, they pretty much just try to buy them, which they've succeeded very well at. And that has really helped out this company. Now, in my opinion, this isn't going to see any sort of slowdown. People are not going to stop using their services. And something that they've also done recently is they recently partnered with Lyft as well to start using Lyft to help transportation with their dates. So that's another good thing with this stock, that we can see that could probably help them out here in the future. But because we've seen this stock come down a bit, I think that what we're going to do is we're going to start seeing it start growing again from here, and start to continue this trajectory that the stock has been on for many years. It's just really has never stopped, and it's just nice to see that it has kind of slowed down a bit. So now it can start picking back up from where it left off. So anyways, I know that there are plenty more good growth stocks out there, but these are just my 5 picks that I made in this video. I can do other videos on many other topics like dividend stocks or stocks on just clean energy. Plenty of other lists that I can be putting together. But I'd like to hear your top growth stock picks. If you don't mind, please sharing that. So anyways, everybody, please like, share, comment, and subscribe. New videos coming out on my channel all the time. Thanks for watching. I'll see you all in the next video coming very soon.